we've got all the hallmarks of a potential face melting breakout. This is not confirmed, to use technical terms, but I love the pattern. I'd like to see a couple backfilling subdivisions and a high at least over 95, 96 range. And then maybe more important to that would be a cooling off of Bitcoin and some impulsive reaction from Ethereum, Solana, and other L1s and L2s that are the base of the infrastructure of digital assets.
Markets are finding their footing again after a roller coaster stretch driven by global economic uncertainty. On today's episode, I'm joined by my co-host, Andy Baer, head of product and research at CoinDesk Indices, as we dive into the mindset of a crypto hedge fund manager. Our guest is Chris Sullivan, co-founder of Hyperion Decimus. Chris Sullivan, welcome to Markets Daily.
Thank you, Jen. Appreciate you having me.
All right, let's just start with what's on everyone's mind. Everyone's watching macro. We have this tariff war happening between the US and the rest of the world, but more interestingly, US and China. We have inflation, we have rate cuts. What are you watching this morning? And talk to me about how that, reflects on your digital asset strategy and how you're looking at digital assets.
Macro is a great place to start because it does command a large amount of influence over capital flows. I'm not, tariff war. What I really kind of see this as is an equalizing of the playing field. I'm a free markets kind of Milton Friedman and Austrian style guy, and so is our whole team. Why does anybody tariff anyone, right? We should have total free trade. So the more equal the playing field gets amongst countries, I think that is a net benefit to markets, certainly a net benefit to suppliers and manufacturers, and then hopefully a benefit to consumers. Because if cars are being tariffed at 250% instead of free trade, who bears the brunt of that always, right? It's the small business owner trying to compete with an international company, as well as the constituent consumer, regardless of sovereignty. So I'd like to see pure free trade, but I don't know when that's going to happen.
Talk to me about what you're watching when it comes to digital assets. We saw Bitcoin break through yesterday. Put this into perspective. We're talking about what's happening from a global perspective. What does that mean for digital assets?
I think what you've seen, you have to separate Bitcoin from the rest of them. It's kind of like it's got both features of risk on and risk off to it. What you've seen recently, again, similar to the corrective period in 2024, long-term holders were accumulating slowly. The VWAP showed that all day long. We just had a pretty nice short covering rally to bust up to the last resistance point before full breakout. And then the trend has turned from kind of bear trend to neutral. So we've got all the hallmarks of a potential face melting breakout. This is not confirmed, to use technical terms, but I love the pattern. I'd like to see a couple backfilling subdivisions and a high at least over 95, 96 range. And then maybe more important to that would be a cooling off of Bitcoin and some impulsive reaction from Ethereum, Solana, and other L1s and L2s that are the base of the infrastructure of digital assets. So I like how it currently looks, but other than Bitcoin, flows have been very, very muted. And you've had, what I do love about the whole situation, you've had pretty monster corrections in all of these great, like top 100 assets. So I think investors can cherry pick their favorite projects and deploy aggressively here.
Hey, Chris. So, during the really choppy parts of the equity market, Bitcoin it actually observed quite a tight range. If you ignore some of the perp liquidations, it was super tight. And for people with your background, when asset prices, observe a very, very tight range, it can be a source of caution, right? What kind of flows were keeping Bitcoin in that very, very tight sort of $81,000 to $83,000 range for such a long period while the rest of the world was, having a moment?
I think you had a combination of seller exhaustion on the long side because there was no leverage on the long side, mixed with these chipping in of spot purchasing at scale and size. You can attribute that to probably some sovereigns and perhaps some US states. You could also attribute that to funds and the ETFs actually this week have actually returned to pretty big flows. I think it's just sub $1 billion. So, and then funds like ours also rebalancing the long book higher. So you had a lot of buyers there because it is now you can't flip from like S&P to gold in your prime broker account. So it does take a few days to transact when you are exiting the TradFi system into the DeFi ecosystem. However, you could see a lot of the kind of representations in the fractals with gold, especially on Bitcoin. Gold's historically had an 8-9 week lead to Bitcoin. Now it's actually matching the fractal. And as an alternative to, FX, which has just gotten annihilated, the poor dollar year to date. And then I think you see a catch up decline in euro near term. That's exhausted on the upside. There's just not a lot of alternatives that you could trust. And here specifically, I've been in this space now almost 10 years. This looks like the scarcity play is coming into effect. Because
did you notice anything in the options market that would complement those kind of flows, or what kind of stuff? Because vol's lower, right?
Yeah, implieds drop precipitously, which is typically a sign of no one knows what's going to happen.
Right.
And I think that actually pushed capital into I'm just going to chip in the spot when there's not any directional side. Yeah. But as a derivatives person, you buy vol when it's cheap, right? Both directions. So I think here you skew to the upside because of the magnitude and duration of the correction. But either way, there's a plethora of asymmetry in the space, more so than the last few years.
Chris, I love a price prediction, and I want to come back to that face melting comment that you just made. You mentioned Bitcoin breaking through to the 95, 96 region. That doesn't seem far fetched from where we are this morning. Talk to me a little bit about that. Where do you see Bitcoin heading in the short term? And then let's take it a step further and talk about the long term.
I don't like price prediction.
I know no one does, but I gotta ask every
but
time.
I will break it down because this is the combo of pattern recognition and then confluence zones, right? So I want to see us at least wick above 97. Then we will retrace and have a pullback. I'd like to see that hold above 85. Then from there, there's kind of quite a bit of green shoots towards 127, 130. And so those are kind of those immediate pivot points, call it next 60 to 90 days. And those are reasonable targets. I think if you do get a sovereign wealth, a countrywide and state bid, and again, 3% of investors have exposure to this. So I don't know when there's going to be an adoption acceleration. It's actually way slower than I had anticipated. But the magnitude of tech advancements in Web3, AI, L1s, app development, interface, it's just a lot more dynamic than it's ever been. Interoperability, shared security, all of these things have permeated in the last 24 to 36 months. And I never hear that narrative or even info on most periodicals in TradFi, certainly, and very few except for CoinDesk in our space. So I just think there's a lot more data to analyze, a lot more confidence investors can have in projects, and then a lot more product offering that give kind of risk managed approach to the space.
You mentioned a couple of things that resonate a lot with us that you have to think about Bitcoin separately and then kind of everything else. And also that Bitcoin would kind of in effect have to lead another rally out of a soft period, and that there might be some good value to pick up in other majors or in other large caps. Mm-hmm. When do we get to the point, do you think, where people start to not need a Bitcoin rally to lead us out in the growthier stuff, right? Well, people will look at technology names more on their own and treat Bitcoin as a quality name, but not necessarily have to be a leadership name.
To quote the prophetic Spaceballs, when will then be now? Soon. I can't, for the life of me, I can't give people more than we're giving as far as our deep bottom up research on these projects, because when you're comping Web3 to Web2, it's not comparable, right? In one sense, yes, they're oligarchies, monopolies, and it's going to be hard to erode. But if you just demo and compare cost savings, efficiencies, et cetera, there is no comparison. So it's very difficult to predict when investors will recognize the value proposition of, I can take from my NASDAQ dollars, reduce my total at risk, and get a better risk reward from other, ex Bitcoin projects. But I do think the knocking on the doors occurring. Our pipeline's probably the biggest it's ever been from diverse sets of investors, both high net worth and institutional. You have more and more products coming on the ETP side. You've got structures, you've got futures. I think the access points and the diversity of offering will help feed the research component of it. But as I've said often, price is the arbiter of truth. All you need to see is a little impulsive rally, and people are going to be forced to pay attention. And I think projects with sustainable and durable revenue, with obvious and durable development, especially on the application layer, those are, in my opinion, very undervalued here.
You mentioned adoption there, and for so long we've heard, once we have regulatory clarity, the masses will come. I think we have our next SEC roundtable tomorrow. This is the first roundtable where we might hear from new SEC Chair Atkins. We are expecting legislation in the United States. We are very much getting what this industry has asked for. And I just want to get your perspective. Why do you think markets maybe haven't reacted in the way that some would have hoped?
It's a great question. I think in some instances, part of that was priced in the fall. And then in others, there's not really been an unlocking of the gates on large pools of institutional capital because there's not that tangible letter of law being written. I think a lot of folks have used that as an excuse, but also when you're looking at macro from a portfolio allocation perspective, look at the destruction in the bond market the last 4 years, right? That's a large part of pension endowment allocations. And then you've got to go to privates, which have had no liquidity. Real estate commercial's gotten absolutely smoked, right? Plus rates high, so there's no liquidity coming from that. So it's as like all of life and all of analysis, it's super multi-factored. And there's not this, if this, then that, and the flood occurs. So where I would focus, especially as an individual investor, is when that unknown known becomes a known, then it is damn well going to be priced in. And if you're late, you miss out on one of the better risk reward opportunities in the space's history. Yeah. So I think you've got December 18, you've got November 22, and then you have now.
Yeah, those are great. Those are great landmark dates
of magnitude.
So your flagship fund Libertas continues to do well, and of course, last year you launched the Achilles fund, and as a disclosure, CoinDesk Indices as an engagement there. So we're looking at that closely together. How are you feeling about fund performance given how choppy things have been, and what can you share about how these funds are positioned going into maybe what might be a pretty spectacular recovery rally?
Yeah, both have outperformed our expectations just a little bit, because with programmatic and systematic trading, you don't, if you've constructed it well, it doesn't really deviate too much. So we did have a huge trend change that our new fund Achilles did spot, got out of the way, had a low single digit give back at this point, and then is actually started nibbling on the turn here, because it basically is waiting to strengthen the signal and will deploy as the strength of the signal increases. Macro has remained positive. Global M2 has gone pretty much parabolic in hockey stick fashion. Historically, there's a 80 to 100-day lag on that. So we do expect financing conditions to ease ever so slightly. And then sentiment went, I think on the equity market went to 4. And then crypto market, it's like people are so weak now. It's pathetic. Sorry, everyone. So whenever you have that, you typically have capitulation, at least in sentiment. And then, oh, wait, I've got to invest. Whoops, I just missed an epic opportunity basically in everything. So I think you're going to see the flows at the granular level in both TradFi and DeFi improve. And obviously smart investors first and then follow on after that. So I think with respect to how our new fund is constructed, because it overlays the macro with trending, it really gives the best of both worlds ahead of time. So we can kind of anticipate the positioning where it'll be kind of full in on a breakout, and we've avoided, I think Ethereum was down 45% in the first quarter, and as that is number 2 asset to Bitcoin, for the P&L that system's achieved is pretty we're pretty stoked on, to say the least.
I want to talk to you about being a fund manager, right? We know that you need to react quickly, decisively. I want to know how much dry powder you're keeping around for when things normalize, when things feel better than they do now.
So it depends on what you're defining as dry powder. And then are you saying personally or in the funds?
I would say in the funds.
So we basically have systems for systems, right? And strategies for strategies. So I don't want to sit in fiat. What's DXY down year to date? Double digits. Well, we're all poor. Thanks, central banks. And I would attribute that to an at least potentially never ending decline of fiat, right? Because the money, the supply always goes up. So if we're out of an uptrend and macro is positive, then we're at least going to have it invest in cash equivalents, right? So it's getting some kind of yield. There's not necessarily a pocket that we identify for, okay, if Armageddon comes in. Now, we don't use leverage, but there's never not going to be a chase for return in a strategic, systematic fashion. And I certainly don't want to hold fiat. Like from Ray Dalio to the great Thomas Sowell, sitting in fiat, cash is trash, always.
How do you see, the other part about being a hedge fund manager is being a hedge fund manager and running a business. I think we're all a little surprised that a giant crypto hedge fund might only still be a couple of $100 million. How do you see that changing, with things like prime brokers being acquired and banks starting to tiptoe in, at least on the custody side? Is it gonna be the infrastructure and safety element that's gonna help hedge fund investors get into the asset class, or what's gonna be the catalyst?
If I knew, Andy, I would
help it come to fruition. Don't tell everyone. Keep it to yourself. It's like a price prediction.
I actually would have more success with price predictions. Predicting humans' behavior is ever so difficult, right? I think maybe
tell them what they should do.
We're trying because it really should be, when you're constructing a portfolio, there really should be a combination of agnostic discipline and process with a passionate review of risk reward, right? So as a modest sized hedge fund, as you pointed out, relative to TradFi, we're still structured the same way. Delaware, Cayman, auditor, admin, blah, blah, blah. So who cares what you're actually trading? It's all about the P&L and the quality of the risk adjusted return. I think in reality, you've got cap intros starting at those prime brokers. I think when legislation is inked, there's then no other excuse. And as you see a continued outperformance against equities on this potential rebound or potential another leg of the bull trend, there's going to start to be the fiduciary negligence thrown around. And people are very quick to pick on asset managers at the top level, right? And at some point, just like you've seen cases against managers for missing upside in the S&P, I think, especially on the pension side, because endowments are basically an NGO, but on the pension side, where it's public dollars, with the liquidity of Bitcoin in the space, there is literally no excuse to not have 2 to 5%. And if you put it in a risk managed hedge fund or couple funds, then you're checking the box and giving your constituents the diversification and the upside they deserve. Nothing on the planet has the asymmetry that digital assets have. Absolutely nothing.
Well, on that note, Chris, it's been such a pleasure having you on Markets Daily today. Thanks so much for joining Andy and I.
Thank you.